Let's get started. Thank you guys for joining us today. Welcome. This is something we do pretty often, but this is the first time we decided to try to do it a little bit bigger. So thank you all for being with us. My name is Steve. I'm a mortgage broker in the Bay Area. I live and I pretty much spend my whole life in the Bay Area. And Lily's my partner in this. She's a real estate agent. Lily, want to say hi?
Hi. Hi.
And yeah, so let's get started. We'll kind of go through what we're gonna do. So today we'll go over the market a little bit. We'll go through what changed. So there's big news out there right now where the quarantine, the lockdowns are slowly easing. San Francisco is probably one of the more conservative ones, but other counties are starting to be a little bit more aggressive. So we'll look into how it affects real estate, if you could still buy, how you could see houses. Then I'll go over a little bit of economic updates, the unemployment, the interest rates, how everything has to do with real estate market and how it could benefit you. Part two of this presentation, we're gonna do like a deep dive. So I mean, it's not required, but if you want to stay for both parts, you could take a look of how to buy real estate and basically like a step-by-step of what the process is like. And then of course, during the whole presentation, feel free to put in questions, and then at the end there'll be a general question and answer section. And yeah, so these presentations, like I said, we do quite a lot of them. We do it in Russian, we do it in English, we kind of switch off from time to time. They work really well if you ask questions. So any questions come up, just feel free to type away, and then we're gonna see it in the presentation, and then we'll be able to address it right away. Okay, let's get started.
Hi, yeah, so a little bit about me. I'm a realtor in the Bay Area, so I represent buyers and sellers, mostly 2 hours away from Tri-City. So basically I will travel with some of my buyers to Sacramento area. I have a lot of people who retire, sell here, and then they buy something in Sacramento area. Yes, I wouldn't travel to San Diego, but I can direct right agent for you. Okay, so I'm an agent in a small brokerage. This is not a franchise. Basically, I work around 2 hours away, right, from Tri-City. What agents do, I think everyone pretty much knows what agents do. We find homes, we help reading the paperwork, basically talk about inspections, what are dangers, so like in the inspections, what to pay attention to. So we always protect the buyer's interest, the seller's interest, right? Like when we work together, when you're a buyer, I represent you as a buyer. And mostly, yes, it's negotiation skills, which is very important during transactions, right? We can show homes, not actually as of today, right? Due to COVID, we don't have open houses anymore. So, but yes, properties sell, properties go of them. I mean, like they sell pretty fast, some of them in very desirable areas. Agents show the properties. We go, we just wear masks, we fill up special forms, we wear gloves, and of course there is a sanitizers and all so far. So basically, yes, we do have keys to every house. If the house is on the market, we can show it at any time, right? So what else we do as a realtors, right? We do market analysis, right? Before you submit an offer, which is a contract for the house, we always find out what's the good price to give for the house, right? What's the right price for the house? And basically that's it. I represent resales and as well as new developments. If someone tries to buy a new development, please reach me out, because there should be a separate topic on the new developments, because there is much more information on new developments, but we can create another webinar on that. But if you have questions about new developments, please reach me out. Okay, so next.
That's me. Really old picture. Okay, so my name is Steve. I'm a mortgage broker. I work with a local family-owned brokerage in Campbell. Company's been around since like the late 80s, probably before I was born. But anyway, so it's not a big bank. It's a small family-owned mortgage company, and we specialize in all different types of real estate lending. And personally, I became a first-time home buyer. Wow, it's already been 2.5 years, but it's time flies. And during this process, it really helped me understand what goes through transaction from the buyer side, because this 30 days that you're in the contract to purchase real estate, it could be really stressful times, and there's so much going on. A couple sleepless nights, but going through it myself has really helped me kind of connect with my clientele. And you know, we're focusing a lot on first-time home buyers. It's a good time right now, and this is primarily what we're here to kind of go over and explain. So on the next slide, why mortgage broker versus just walking into Wells Fargo or Citibank, or you know, some of the big names that you could walk into. Well, actually, right now you can't even really walk into them. You have to kind of wait outside for 45 minutes. But anyway, so mortgage brokers. So we have access to about 40, 50 different banks. We do work with Wells Fargo as well. That's one of the bigger ones, but majority of them are going to be more on the wholesale side. Probably one of the bigger ones you might have heard of, Quicken Loans, Rocket Mortgage. And the benefit to that is we're not tied to one bank, one program, one rate. Pretty much all the way until the very end of the deal. I could shop for my clients and compare to all the different banks that we have to make sure that we pick the right one that's going to be the best option. And in super rare cases where, you know, something might happen with the structure or the underwriter is the person that sits inside a bank. In some rare cases where they might not agree, or they might decide that, you know, this loan doesn't fit their criteria. When you're with a broker, it's really easy to basically pack up and then apply or move your loan to a different lender. If you're stuck with one bank, like say Wells Fargo, and they say no, sorry, then you're kind of stuck and you have to scramble to find a new option. So yeah, that's pretty much the benefit, you know, access to multiple banks at the same time, shop the best fees and rates, and flexibility on underwriting.
Yeah, so can I add one more just example? So right now I'm in transaction with one buyer in San Jose, right? And they came up with so they came from a different, basically connections, right? And so they got their own lender from somewhere, and basically, yes. So we needed to go move on with a loan on the transaction. Our offer got accepted. So I called the guy, let's say on Friday, sent him a contract. So to move the loan and to start the process, he said, yes, yes, yes. Then on Monday, on Memorial Day, I called him up and he says, well, I'm resting, so, but we need to move the loan, right? So, and only on Tuesday, he submitted all the paperwork, which never happens with Steve, right? Steve is constantly working. He's like every day in a reach. So basically you can call him, text him, email him. That's why it actually works perfectly. And then you have access to 50 banks instead of one bank, as Steve said before. Yes, and I had actually a very hard time with my transaction, which is right now. But you know, they preferred the lender. Also, everything what the other lender offered, it was the same what Steve would offer, right? No nothing different. It's just the way how they work and the way how Steve works, and you know, he replies very fast. Yes, the is this yeah. So next, we can okay, so we can talk a little bit about market update. And as of today, right, like when the COVID started, everyone was kind of in this situation thinking that the properties don't sell and the market is going to collapse, so on. But in reality is, so while everyone was thinking that the market is collapsing and so on, the market was actually moving. So you still could show properties, you still can come to the homes. It just was a good time because instead of, let's say, 10 offers, there were maybe 2 offers, or maybe 1 offer. So basically you had less competition, right? So right now, as of May, end of May, let's say yesterday, oh no, 2 days ago, I submitted for one house in San Ramon. It was 7 offers. Today, I called up one agent on a Livermore home for my buyer, and they had already on hand 7 offers. So basically, yes, the market is moving, and it's moving fast, actually. So if something on the market with a good schools, right, and a good location, it will move. So to talk about what happens right now with the prices, right? Let's say on this graph, we just show examples of Fremont and Pleasanton. So basically, this is a list price, right? What people list the homes for. And the Pleasanton, yeah, it started to grow a little bit. Fremont, well, they already were overpricing properties, right, lately, but right now they kind of like mellowed down right here. So basically, list price, it's what the agents are pricing it for sale, right? In San Jose, if you look on a graph, listing price is kind of like flattening out. In Santa Clara, it's growing, it's bigger demand. So in San Jose, it's similar. There is like different areas. The schools are good, the house is going to go fast. So in a market, like let's say list price vice selling price, right? When we looked at January of the beginning of the year, right, everything was going really fast, and it was like probably in some areas people would put like 100K above the asking price, 50K above asking price. I've seen 200 above the asking price. I've seen 400 above asking price. The prices went crazy. So then COVID started, right? It mellowed down, and then why I was talking on the previous seminars, I would say that max price, if the market is gonna kind of like go down, it's gonna be probably 20% down maximum what can happen to the market, right? So but right now, so how it would show, right, basically if the house was in the market for 1 million in January and somebody would come up and there is like 5-7 offers coming in, and then of course they're going to stretch it to probably 1.2. People would put 1.1, 1.2. So if we would see 20% like in potential going down, right, it would be that difference that people didn't have much of free cash, right? And when COVID happened, that's what happened, right? Like the market was unexpected, the stock market was unexpected. So people didn't have much of a free cash, and people didn't know what's going to happen. But right now, since as of today, right, we see it's coming back. So I don't see much of a differences right now. Of course, people don't put 100K. What I notice is some San Jose homes, which I call and I would ask, hey, did you, let's say they priced a house for $1 million, right? And then I ask them like, hey, do you have offers? They have like, oh yes, we do have 4 offers. And I ask, did the house hit 1 million? And they say like, no, but we prefer to sell for 1 million, but the house was appraised, not appraised, but the Zillow estimate says it's 1.1, right? So basically they're expecting at least 1 million. But let's say it all depends on the area where the house is located. It all depends on the schools. If it's very highly desirable area, it's not going to go under, right? You have to give at least to start from a listing price. If the house is hanging on the market like for 50 days, then yes, you can try under asking. So yeah, just a little bit update. I'm very active on the market every day, so I see homes everywhere. So sometimes my clients send me homes which I already seen before, and please, if you have like any questions, you can write them in the chat, and I can go from there to give you more information. Okay, what's the difference between these two charts? Two charts, there is no difference. It just describes two different cities, right? Comparing Fremont to Pleasanton and San Jose, Santa Clara on the listing prices. What happens on the market as of today, right? On the listing prices, what the sellers are listing their homes for, right? Because in January, what happened when people started to have, January, let's say in Blossom Hill Valley, I was sure I can get my buyers a house, single family, for 1.2, right? I say like, okay, we're gonna get it for 1.2, no problem, because I was like 1.2, it was more than enough, right, to get a very good house. So then January started and people started outbidding us, like basically 100K, 150K. My buyers first submitted at 50K, then 70K above, then 100K above. And so basically the Blossom Hill Valley in two-story homes, they hit like 1.3, 1.35. So of course my buyers would be like out, right? Because they cannot, basically if 2 or 3 homes in the area, they sell for 1.35, right? Everyone at the same square footage, they would expect these prices. So that just tells what these graphs just show what listing price people are putting right now. They don't, like the expectations of sellers, right, depends on the demand on the market. Yeah, so we can go to the different slide. So on inventory, right? Inventory is amount of homes on the market right now, right? Let's say for the last 2 years, it shows again example of Fremont and Pleasanton. As you see, in April, we just like in May, right, we started to grow the inventory, which is really good. Before, let's say in January, it was very low, very low. So right now we're kind of catching up, but still it's not enough. There is more buyers on the market than sellers. And actually everything what is from new developments, everything what is built as of today, right, it's not enough. It's not enough. And actually the COVID itself, when the development stopped for a while, they postponed a lot of deliveries. That's even making it even worse, so we don't have enough homes. I'm hoping we're going to have more homes and then my buyers can buy, right? And still we're searching. Down at the bottom graph, we would see like San Jose inventory in Santa Clara. So basically in San Jose, we see growth. And I'm hoping it's going to come up too. Yes, to understand, a lot of sellers, they've been hoping that they would be able to do open houses by the end of May, right? But I think it's not going to happen. No open houses would be allowed. Still, I think it's going to stay the same way. We just would make an appointment, show the homes by appointment. And so right now, people who need to sell, they still going to put it on the market, right? They have to move, they have to sell the homes. So they can't, the expectations of open homes are, like they done. I don't think they're gonna, maybe in August that will happen, but who knows? Yes, and this is a graph of what happens with each cycle in real estate market, right? With every year recession or any crisis, right? So everyone is like, I have a lot of clients reaching out to me and saying, hey, the market is going to crash, the real estate market is going to crash. Well, it's not. So the problem, especially with what I'm seeing right now as of today, right? 7 offers in one house, 7 offers on another house. In San Jose, I had 4 offers. So buyers are moving, buyers are buying. So this just explains what happens with the market, right? If you look at the graph, every year, right, there is a little crash and then it goes up again. So real estate always will grow, even if we'll see a little change on this graph this year, a little bit, but it's still going to go up. So the price, like prices in Bay Area are very specific. They're very different from the rest of US, right? We don't have enough the homes for sale. We don't have enough developments, but the demand is big to buy. And then rents, right? Rents are very high. I have buyers who pay 4,000 rent, who pay like 3,500 rent, and it makes sense to buy for a lot of people, right? Of course, if you do live in Cupertino and want to buy a Cupertino home, right? So if you rent for 5K, it probably makes sense for you to rent there instead of buying with a small down payment. So you have to calculate your numbers and come up with what's good for you, right? Because every year you spend so much on a rent when you could put it in your equity. So so basically in this graph, it just shows that we're still going to go up. And then you have to take into consideration that a lot of homes in the Bay Area, specifically in the Bay Area, from about 35 to 40%, they purchased for cash, right? So, and they still are purchased for cash. You would see a lot of homes like 550. I've seen home which was like maybe in January, in January sold for 2.8 million cash, right? So let's say if you take into consideration all these homes which sold for cash, so would you even expect the crash to go what like people expect? Oh, I can buy apartment for 400K in San Francisco. No, it's not going to happen. You can buy maybe for 700K, right? So, but not 400K. So basically a lot of different moments here you have to consider. Steve, do you want to add anything?
Yeah, I just want to add, so everyone's probably kind of zooming into this number where it's minus 27. And a lot of clients, a lot of friends, even people that are a little bit older generation, they always refer to this time period thinking that like, oh, wow, like, this was down almost 30%. Let's wait for another time like this. But to be kind of honest and break it down, this time period, and the reason for this huge decline in value had to do with banking practices during that time. So banking industry was like they had no regulations at this time. I mean, of course they had some regulations, but the mortgage industry itself, 2006 to 2008, they were how do you say it, artificially kind of artificially raising values up. So anyone during this time, anyone could get a loan. You didn't have to qualify for it. You could literally, if like say you wanted to buy a house, your realtor could call an appraiser that's gonna put together a report, say that yes, I'm a licensed appraiser. I think this house is worth X amount. During those times, that person didn't even have to like show up to the property. They could have called and asked them like, hey, can you make this house value 1.2? And this person would say, yeah, no problem. And then they would do it. And then to add this to the lending atmosphere during those times where anyone could get a loan, the values were artificial. So it's obviously that, things were like way, way overpriced than they should have been. So once those loans went away, everything just crashed. People stopped paying because they bought those homes with value that wasn't really there. It was like inflated. So that's why the biggest adjustment happened during that time. And today, I mean, I've been doing lending 6-7 years. So today, none of those practices, none of those kind of loans without any verifications exist anymore. So yeah, I mean, it's a popular question. No one has a crystal ball, of course. In 10 years, we'll look at this chart and it's going to say coronavirus recession. I mean, we are in a recession. I mean, things are kind of looking worse and worse every day, but it doesn't always reflect real estate value. And that's kind of, a lot of people are thinking that it will happen again, but I don't know. It's tough to see it happening, because that drop happened only because of lending, and that kind of loans and that kind of mortgage banks are not around anymore.
Mhm. And can we go to a different slide? Yeah. Um, that's a little statistical data from MLS. It just shows you how it's the end of I think it's the end of April, right? Like based on, so it just shows that inventory went down from, so basically, yes, the difference, I can send you these slides. It just proves that we don't have enough inventory, but the homes are still selling. And the home values, you would see like in San Mateo County, the median single family, it would cost like 1.6 in average, right? And it would go in 9 days, basically about 104 percent above asking price, right? They don't go below. Then can we go to different slide? If somebody wants these slides, I can post them on my Facebook page, and you can see them there. So this is about San Mateo County, right? I think we just talked San Mateo County, the other one, which was yes, San Mateo County. This is condo townhomes, right? That shows they go in average about 10 days, and they still go above asking price, right? Some of them, which are not highly desirable, you still can get at the list price. Okay, can we go further? Yeah, it's I'm not gonna go deep into that, but I can share that. Okay, buying homes during COVID. Yes, somebody asks to share the slides. Yes, I will. Real estate, you can find the slides on my Facebook page. If you go to my Facebook page, I'll post some slides in there. Mhm. And please like our Facebook pages. So we have a lot of information, and basically I'm an agent who is very active in real estate, and I do post every update, right? What happens with a specific company, what happens with a BART extension. You know, like if there is interesting listing, I would share it. If there is any potentially good home to sell, right, I would list it, because sometimes I share you know, like I look at the real estate as an investment, right? If there is a good house with a potential, I will always post it on my Facebook. You know, some of my buyers, some of my flippers, some of my friends, they would be interested. If, you know, like, of course I can post every house on my Facebook page, but only the ones which I think is a good investment in the future, right? Please follow us on Facebook. Yes, next, what I was going to speak about, it's about buying home during COVID, right? So basically, we are essential business as a real estate. People need to move, people need to to live somewhere, right? So yes, we are working, we do virtual tours. We can look at the properties virtually. We still, I still every day I go with my buyers. I go with a couple of my buyers to like multiple homes, and they actively searching. We just have to put gloves on, again, masks, some sanitizers. Yes, some restrictions. Some people say don't touch the doorknobs, don't touch the. So basically, I just go and do it with gloves for my clients, right, to show what's in the closet, what's in the bathroom, what's condition property is, right. So basically, yes, there is specific safety measures, and we fill up some forms to protect our buyers and sellers constantly when we go show properties. That's basically it. The market is the same. We just don't have open houses, right? That's the only restriction we have right now. Uh, and yeah, we can go to the next slide. This is Steve for you.
Okay, before I jump into some economic news, it's kind of negative, but I think it's important just to kind of share it. I do want to touch on, so people still buy. Like, today just closed a transaction in San Francisco. It was a young family, husband, wife. They just had a baby, and then they wanted to stay in the city. And believe it or not, they've been looking for over a year. And fast forward, not fast forward, but let's take back about 6 months ago. they were looking to buy, and everything that they liked was $1 million or like a little bit more. They even went as far as trying to find money from family, from friends, just to kind of add a couple thousand here and there to make them a little bit more competitive. And then they did make a couple offers for $1 million and still didn't get it. Now today they just closed a condo in San Francisco, and it was they didn't really have much competition. Maybe there was one or two different offers. So anyways, so I'll get into a little bit more economy. Just wanted to share that as negative as these statistics are, Bay Area is a little bit different, and people are still buying. And even when I bought my house, it was 2 years ago in March. You know, many people told me that wait, don't buy, you're buying at the peak. But I mean, obviously they were wrong. Okay, so a little bit about economy and where it's going. So today, unemployment numbers came out for last week, an additional 2.5 million. This is for the whole nation. So there's not really any statistics to break down the Bay Area or Silicon Valley, because we do kind of carry the nation for the most part. But overall, so 40 million in 10 weeks submitted unemployment claims. Most jobs affected are in leisure, hospitality, so food, restaurants, and travel, primarily. I mean, it makes sense. People are not traveling, eating, so that's well, at least eating out. Okay, and then on the next page there will be a graph just to kind of give you an idea. So today we're at 40 million in 10 weeks. If you look at the last recession that we just kind of went over on the different graphs where real estate dropped, that time, that was mainly affected by, mortgage practice, and it didn't really affect unemployment that much. If you could see during those times, it barely even got to 1 million claims. Now we're at 40. So just kind of put it in perspective. It is scary, but most of the sectors and job categories that are infected or affected are not how do you say it? It may not be the people that are looking to buy homes. But and again, this is nationwide. Let's see, next slide. Okay, so employed. There has been actually some news in the Bay Area starting to come up. Like I have a lot of friends that work in tech sales, software sales. I mean, it kind of makes sense, if their biggest client is going to be a small business owner around the whole nation. So obviously, like those companies are going to lay off their sales team little by little, just because sales are down. So it makes sense. It doesn't really scare me or bother me. Some of the bigger companies like Tesla, Google, Uber, Google is saying that they're pausing hiring for the year. Uber, Tesla is laying off people, but again, that's kind of understandable because it all falls into that section of employment that got hit the most. Transportation. Um, well, Tesla, that's kind of its own battle, but I guess because of the shutdown of factory and stuff. Um, but it all comes down to the sales. So as we're into this pandemic and people are not spending money on these industries, then obviously those numbers are going to skyrocket. But it's not always directly affecting real estate or even stock market. I don't know how many of you follow the stock market, but what's going on, it's kind of like there's no explanation for it because stock market keeps rising, and then these numbers are out there. So it's something is off. But bottom line is it's not always all directly related to real estate, to stock market. Yes, some people are gonna get it bad, but it's not. It doesn't mean that you're gonna find houses for 50% off soon. And let's see, next slide, please. Okay, another thing that kind of ties it all in. I'm not sure if it even affects most of us here, but nationwide, there is about 8% of loans that are conventionally, these are loans that are insured by the government, that are in forbearance. Forbearance means that a borrower could apply and they don't have to make their payment for 3 months. At the end of the period, they do have to pay it back, but it gives them flexibility not to make their payment by the first of the month. And then this one as well. I mean, more nationwide, of course, but about 20% of renters in the nation did not make their May 6th rent payment. The government is doing a lot, though. Like, this is one of the reasons why I strongly feel like real estate may not get affected that much, is because what the government is doing in the last two months is, it's like times 10 of what they did all of 2008 recession. The amount of money they're printing, the amount of stimulus checks, the amount of unemployment benefits. Like, I've even talked to a friend of mine that was in the tech sales industry, and they were making like base maybe 60,000 plus bonuses, of course. But now with the new unemployment benefits, like it's kind of like in his benefit to write it out and look for the next job, because the amount of money government is giving right now is it's unbelievable. It's I think they'll be able to somehow get us out of all this, and it's just gonna start picking up where we left off. Okay, so next slide. Any questions, please feel free. The chat pops up here, so I see it. A little bit on lending update. So underwriting. So the last 45 days, people that work for themselves have got hit the hardest. Like, I have people now that are buying, that are refinancing. Even someone who's like a State Farm insurance broker for the last 20 years. Obviously, that's a business that it's every year insurance policies get renewed, and so income is pretty stable. But even for someone like that, a bank is requiring to go to the maximum right now to get a loan. They have to put together a balance sheet, spreadsheets, like things that a regular self-employed person might not even really have available right away. So for the self-employed, it's becoming easier, but I would still say a lot harder than it was 2 months ago to get a loan. Still possible. Low credit scores. Low credit scores. I mean, if I come across a client with a credit score that's going to be under 660, I would work with them to try to get it up, because there's not many programs. I mean, of course, there are programs available, but it's not going to be attractive. It's going to be really expensive, and it's going to be some online bank that you don't want to have anything to do with, because they might just drag you along, and then in two weeks or 2 months they say sorry, but we cannot give you a loan. So yes, I work with people that have low credit scores just to get it up. Pretty much, if I see a credit score, I could tell right away that if you do this and this, let's rerun it in 2-3 weeks, you should get a much different score. And jumbo loans. So jumbo loans are primarily like loans that you get from the big banks. These are going to be loans 766 and up. So people that are buying for $1 million, $1.1 million, $2 million, and they use jumbo loans to make this happen when they have down payment around 10 to 20%. So the big banks are actually not really interested in these kind of loans at the moment. So Citibank had the most aggressive purchase, and right now they're not doing it anymore. Chase and Wells Fargo right now is requiring 20% down on all their loans. Again, these are jumbo loans. We'll kind of go over the difference, but yeah, it's to sum it up, it's getting easier. It's getting a little bit back to how it was pre coronavirus, but at the same time, it's still going to be a little bit tough for some people to get a loan. Okay, so that's lending. Now I want to just kind of go over the type of buyers that a first-time home buyer might have as their competition on the market. and to kind of go over how it might make it hard for that person to buy. So one of the most popular ways, and I mean, this happens to a lot of people I come across, like I've been doing loans for 6 years, and I have people that within that time are already on their second house. So it happens a lot. You know, people buy something just to get in because rents are high and they have money just sitting in the bank where no, they're not, you know, they're getting like $2 a month on interest on this money. So it kind of makes sense to put it into something in a good area that's going to grow later. You could sell it or take it back out. Anyways, so one of the more popular ways for somebody to upgrade when they already own a house is to do a cash out loan. Cash out loan is, in simple terms, it's when you access the equity that you've gained and appreciated over the years. So here, for example, so say a family bought a house for 800,000 and they have a loan for 350,000. So maybe they put 120, 160,000 5 years ago. Then the prices went up. So right now the value it's a little bit higher. So what one of the most popular things to do, and as this is assuming that they want to keep this house and they want to buy a bigger one and rent this one out later. So what people would do is they take out a new loan from this house for 520,000. Let's just say interest rate is 3.5, and the payment on that would be 233.35, or sorry, 2,335. What this does is it pays off their original loan for 350, and it gives them 170,000 in cash. Now this cash, the lender doesn't really care what you do with. You could buy Bitcoin, you could put it in the market, but in this case, the most popular way is this family would use that money to use as a down payment on the next house. And then the loan stays. So you'll have this loan fixed there for the 520,000. That doesn't have to change. And then let's just say that over 5 years they were able to accumulate some more cash, and let's say that they added another 130,000 to this, and now they're ready. They have 20% down, so combined they have 300,000, and now they want to buy for whatever reason. Maybe their kids growing up, they need better schools, or maybe they had more kids, and now they want to use this 300,000 and buy a $1.5 million house. So that's exactly 20% of that. So basically, this was a way where somebody doesn't have to accumulate 300,000 to buy a bigger house. They could basically access some of the equity that they've gained on their current house. But today, these kind of loans are pretty much non-existent. So when COVID took place, a lot of banks stopped doing these loans. Like you cannot go to Wells Fargo right now and say that, you know, I have $300,000 in equity. I want to take it out and I want to buy something else. Chances are they'll probably say, no, I'm sorry, because we're not doing these loans. And many banks are slowly, or not slowly, but many banks are following the same guidelines. And these loans are becoming less and less doable. If you do find that it's going to be interest rate that's so high that most people would just like, you know, say, no, I'll find money somewhere else, or I just won't buy a bigger place. Okay, so long story short, why I show this example, this is another buyer on the market today, that could be a competition for a first-time home buyer trying to enter the market and get their first property. So this kind of buyer, where 2-3 months ago there were a lot of them, because as interest rates drop, people want to upgrade their house, they want to get something bigger. Today, that buyer is not really on the market because they cannot access their equity at the moment. So the amount of buyers is decreasing just because of this. And then another reason that's more lending related. So on the next slide, it's going to be jumbo loans. So just about 2-3 months ago, so anyone that had 10% down would be able to take out 2 loans. This is called a piggyback loan. You can Google it. It's basically you're getting 2 loans and you're bringing in 10% down. So for example, on a 1.1 purchase price with 10% down, you would get the first loan from one bank at 880 and the second loan for 110, and you would bring in 110,000. So this was the best, probably the most popular way to structure this deal. This is a loan structure that was around, years ago, and I think it will come back for sure. It has to come back, but at the moment, this changed a lot. So say this buyer only had 10% down 2 months ago, and they were in the market. Today, most banks are going to require them to have 20% down. There are some banks, I know Citibank is doing 15% down. Their underwriting is not the easiest to get it, but the program does exist. But anyway, so that's a difference in 5%. So that same buyer today would have to come up with additional 55,000 just to buy the same property, just because the program's changed. And again, I mean, maybe they have it, maybe they're counting on stocks to liquidate it and happen, which is another kind of catch-22 because stocks are down from where they were to open the year. So anyways, another example that a buyer that was approved two months ago, right now, may not be competition or may not be on the market because of the way the loans and programs have changed. Okay, no questions? It's a lot of information. Um, okay, now just kind of my, like I said, I bought my property when most people said that, it was the peak. It was an up and coming neighborhood in Oakland. And a lot of people said that, don't buy, this is 2008, like this neighborhood should never be like close to 1 million, blah, blah, blah. Anyways, now long story short, it's appreciated since then. I was able to refinance my mortgage. That's another thing. So when I purchased my property, the property was in the 900 range. Not bragging, but just to kind of go over the numbers. In that range, I was able to put less than 10% down payment for it, and to use this first-time home buyer program. I mean, we could go over a little bit more into it, but buy now or wait for a potential drop. I guess, I mean, I'm not a lawyer. I know a lot of attorneys, but the most popular answer in the attorney world is it depends, right? But same here. It does really depend. If we come across a lot of buyers in San Jose, in San Francisco, that are paying over $4,000 a month in rent. And in that situation, I mean, if it's a young couple or if it's like a single person and they don't really need huge space, and they have some money saved, I think in San Francisco you could find something that will be kind of on the same level. And then also, how competitive is the area you want to buy in? I mean, me and Lily, we work with families that have kids from time to time, and it's kind of spread out. Some kid will be in elementary school, one will be like leaving elementary school, and then they're 2-3 years away from high school or middle school. So it's all kind of plays a role in the decision of our buyers. But at the same time, those markets are usually very, very competitive. It's kind of rare to see a property there on the market for over a couple weeks. And I mean, that's kind of basic supply and demand. It's in that situation, it might be kind of tough to get in there on a good deal. You might have to even pay a premium at the moment, just to secure a house there, with the good schools, the good zip codes. Also, how strong is your offer? It's another thing that I wanted to touch on. I mean, I help people with all different kinds of loans, like 5% down, 3% down, 10% down. But one thing to keep in mind is, the economy starts to pick up again, and people are able to walk around freely and actually look at houses and go to open houses. If the mortgage rates continue to stay this low, like on Tuesday, this peaked at almost the bottom that it's ever been. If the mortgage rates continue to stay this low, and things start picking up, I think it's going to be really hard for. We'll give you an example. Say that you're selling something and you have 5 people that want it. One person is going to commit 5% down and then 95% loan. And then you have another person that's going to commit like 25% down in cash and 75% in loan. So from a seller point of view, 9 out of 10 times, even if you write the nicest letter, how you really like their house and you want to raise your kids there. I mean, from a seller point of view, it is going to come down to the number and how strong your offer is, what your financial situation is. It's really going to dictate that, if you see something you like, take action on it, and not wait to see kind of what will happen in the future. And then income, of course, like, it's all those numbers we shared are more on a national level, but at the same time, we are starting to see it more and more here in some sections. And if you made 200,000 last year in IT tech sales, you might want to consider, like, is this going to be sustainable? Like, you might be really good salesman, but there might be a time where that job, that product is just not selling. And so, I mean, there's a lot of factors to consider. If it's the right time to buy now, wait a little bit. Is there going to be a price drop? Will there not be a price drop? I mean, to be honest, no one knows. I wish I knew. I could probably host some kind of thing online and just tell people what the values would be on real estate in the next couple of weeks. Um, but yeah, so it just kind of comes down to case by case. And let's see. So, oh yeah, so next slide. If any questions, feel free. And then next slide, just to give you an idea of what the rates are today. Let's go next slide. And this is a real example. It's kind of interesting. Like, I get a lot of calls that, I mean, we do these seminars a lot. And people are often like very surprised how you could buy, how the rate is so low, even if you don't have 20% down. And another thing on the mortgage insurance. So let's take a look at this example. This is a 30-year fixed mortgage rate. I pulled this like 2 days ago, so the rate is the same. It's been pretty stable. And this is non-jumbo, so this is conventional loans. Conventional loan in the Bay Area, outside of Sonoma County, we're pushed to 765 600. So this is the maximum loan amount to use this program. Anything on top of that is down payment, of course. So here, this is a real example with excellent credit with 10% down. So say it's a $850,000 townhouse or house, and you put 85,000 down. So your loan at 3% is going to have a mortgage payment 3227. Because by rule, anytime you put less than 20% down, there is going to be mortgage insurance. And in this case, you put in 10% down, your mortgage insurance is going to be only $127. So what this equals is $3,354. This is mortgage only. Yes, you'll have property taxes, insurance for the fire separately. And property taxes you get to deduct from your income. Part of the mortgage you get to deduct from your income as well. But if we're just looking at the mortgage, you're going to be at about $3,354. Now, very interesting case. 5% down, same exact scenario, but here, let's say you want to put only 30,000 down, 36,000 down instead of I'm sorry, 40,000 down instead of the 85. And 5% down. Most interesting thing is the rate is the same. So banks are not, so this mortgage insurance is actually a private company that insures the lender in case of default or anything like that, where they basically get their money that they lent you back. So they, in kind of short, they don't really care. They're giving the same rate for someone that puts 5% down or 10% down. So here's an example where the only difference is the mortgage insurance is $51 higher. But you're putting $42,000 less down payment. I mean, it's a pretty nice trade-off. I think most people would keep $42,000 in the bank and then take a $51 a month higher payment. And then the most important thing, actually, before I get into that, mortgage insurance is such a tricky thing. I get a lot of people that are, you know, sitting at home on their couch on Redfin or Zillow, and they start playing around with these calculators. Um, and for some reason, when I quote them the mortgage insurance, or I let them know that like, hey, you know, this is only going to be like $127. They're like, wow, like when I played around with these calculators, they told me it's going to be 300 or more. So it's a little, I'm not sure where it's coming from online, but be careful with online calculators for mortgages at least, because they're not going to give you real numbers. It might actually scare you a little bit. Um, but oh yeah, so most important, so mortgage insurance falls off. So say you consider the first option where you put 85,000. Now this $127, once your loan is paid down by an additional 10% or 85,000, that's gonna disappear forever. You won't have it anymore. I mean, I come across different people. Sometimes they get RSUs, they get stocks, they you know, they get money somehow, and they're just sitting in their bank paying them like $2 a month. So in that case, it makes sense, you know, pay it towards your mortgage. At the end of the day, you get it back. It's your equity. You know, when you sell the property, you get it back. I work with a lot of European clients, and it's like in their custom. I think some of my Asian clients are the same way. It's in their custom to try to like pay off this loan in 5 years instead of 30 years, which is cool. Like, you know, it's more and more power to them. But it's, I mean, I think it's a good thing to try to pay it off, because when you do sell or you refinance or anything, you always could get that money back. So it's not like, you know, you're giving it away forever. You're paying it to yourself in a way. You're putting it into a bank account that's tied down to your house. Okay, so that's a lot of numbers. Sorry guys, but it's just wanted to kind of show difference between that. Any questions? We're here. And yeah, so any questions, type away. Okay, if not, we could, so this is gonna be part 2 of our seminar or webinar. It's just gonna kind of go over how a purchase contract looks, what the steps are, and kind of, yeah, so Lily will take lead,
Yeah.
go from here.
So thank you, Steve. So, yeah, I'm going to talk about purchase price. How does it go? And it's a second part of our presentation. So, if you're a first-time home buyer, it's very good information for you to hear. And just wanted to add about the market, right? So I just recently started seeing, I have some clients looking in San Francisco, and I've seen very nice properties coming up on the market. This is condos, 1 bedroom or 2 bedroom, and they're looking right at the ocean, right? I just saw one pending, and perfect apartment. Basically what happens, it's actually Airbnb got influenced by all the COVID, right? And basically people who got the big loans for the purposes of renting out Airbnb, they cannot sustain, right? They have to put these properties on a sale or long-term rentals. So that's why we would see that's what I'm expecting, and what I'm seeing in San Francisco, there are going to be more and more properties for sale, specifically with views and so on. And then yeah, so I had something else to add, but got off time, I forgot about it. So let's go and discuss how to buy, right? At the beginning, I have a lot of buyers. Oh, okay, there is a question. For the sake of investment, do homes in the Bay Area appreciate more or less than other upcoming tech cities like Austin? That's a very interesting question, actually. You know, yes, I've been looking up the tech Austin recently myself, and especially where Google is building the complex, right? Yes, I think around this area, potentially homes are going to be appreciated, but I don't know for how much. I don't think it's going to go generally much bigger, right? Like, because you have to understand the techie people who are going to go and work in Austin, they salaries adjusted to the state, right? That's not going to happen like they're going to have the same salaries like in here and going to work there, right? So basically, yes, there is a potential, but I don't know how much they're going to appreciate that. In here is still it's gonna appreciate, and the value of real estate is because demand is so high. I think it's gonna I don't know what's gonna happen next, right? But nobody knows what's gonna happen next. So yes, but if you want to invest in Austin, you have to look at it, and if you plan to live here, and you have to look at it too. So it's all personal. You have to see what's your financial situation, what's your work situation, how much down payment you have, but you know, um, there is a lot of things to think about, right? Yes, as again, if I would have a crystal ball, I would say like, oh, okay, like Austin would depreciate like 100%, right? Like, and then I would invest myself in Austin. So, but I don't know. Um, let's see, like, I'm gonna go over the slide about the purchase and how to do. Thank you. Yes, so about the purchase, like let's say I have a lot of clients coming up to me and saying that, hey, we are ready to buy, right? How to start? So what we do, first I have to find out what's the value, what's the price do you have, how did you pre-approve, who pre-approved you? So I always ask them to go and talk to Steve, or you know, maybe somebody comes with their own lender, but yeah, I would recommend Steve, because it works, right? Like we always got constantly offers accepted, and some cases we actually overbid cash offer together. So that's possibilities. Okay, can you explain a bit more about investments in East Bay, since many are going to work from home and move out of San Francisco? Do you think prices are going to appreciate more in East Bay? So working from home, you know, like, yes, we are gonna work, majority we're gonna work from home, but for how long, right? Like, how would it influence the market here? I mean, like, if people move out from San Francisco, I don't see a lot of people moving out from San Francisco. Like, I mean, like, if I would live in San Francisco, I would never sell my apartment there. So I want to buy myself apartment in San Francisco, right? That's what I said. If the San Francisco is going to sell off, it's only probably potentially it's Airbnb rentals, because people can sustain these mortgages, and they can, you know, I have a friend who rented one bedroom like for up to $600 a day, and now she can't rent it out at 120. So you see, like, people who like, but you know, so you have to see the situation of people. If they rent, I mean, like, if they own a lot, like on a loan, right, that doesn't make sense for them to keep these apartments. So on East Bay, yes, we are gonna see, like, still there is a big demand, right? We are gonna have if we're gonna have the same amount of buyers, like 5, you know, I see all these multiple offers, still I see that, right? So we are going to grow. If it's going to be not enough homes on the market, right, that's what I'm expecting, more inventory. But if we're going to stay at the low inventory, I don't know, in summer it's going to be crazy, right? Like it is going to be crazy. So, but you never know. Again, it's just my predictions in the next couple months, right? So also in the East Bay, let's say San Leandro, San Lorenzo, Hayward, right? They are growing very much, right? Why? Let's say from investment point, if you're an investor, right, in you buy there, you can afford a house at 600 or 700, right? So basically, but you can get a rental price at 3K, right? Basically, if the buyer buys from investment point, right, why would they buy a house for $1 million when they can buy for 700K and get 3,000 as a rental, right? So yes, it was a big trend for the last probably half year. There's a lot of purchases in Hayward, San Lorenzo, because still affordable with a good return of investment. And in Hayward, there is some areas, very nice areas, and I'm thinking, like I've seen some. I sold a couple homes there, and I sold one close to Mission Boulevard. We actually got it in the winter for 600K, and it was 3 bedroom, 2 bath, small square, but it was original from original owner. And what happened? My buyers just remodeled it they invested like 60K, but right now the homes the same size with remodeling, they sell on this street like for 730 and higher, right? So they still in a possible gain. And I think on this street I've seen like they don't have a really good schools in the neighborhood, in the specific Hayward neighborhood where I sold, but I've seen on the street families moving in with kids. So I don't know where kids are going to school, right? But people see potential there. So but you have to see area to area, right? Hayward is specific. There is like a lot of good areas, a lot of potentially growing, a lot. And then about working from home too, right? When we think, like, I've been on a lot of forums and chats where techie people will say like, well, we can live anywhere, right? We can go to different state and live there. But it's in the news, I think it was Facebook or somebody announced that they're going to adjust salaries to the states where the people are going to work. And plus it's going to affect people's possibility to grow in a career, right? If you're going to stay specifically in a office location, right, and be working in an area where the offices are, right, you probably will have more potential to grow and to get promotions. So that's number one. And honestly, like about investments, right, you have to see potential areas, what's going to happen next, and nobody knows. But yes, there is still potential to grow in some cities. You just have to look up and what's going to happen. Yes, and for families, let's say, again, without the kids who don't plan, you have to look at it like that and invest, even at purchase. I'm looking at everything as an investment, right? So basically, you don't have kids, you're a couple who work in tech. You don't have to go and get a house with a good school, right? You don't have to go to buy a million, 1.5 home. You can go and start with a potential for, like for growth with a townhouse, with a condo. You have to look at it as, hey, I'm not going to have kids for the next 8 years, right? What's going to happen the next 8 years? You just, instead of, if you buy something close to the commute, like close to BART, close to these BART stations or Caltrain, in a good area, right? Even if it's small apartment, it's still gonna sell in the future, right? It doesn't matter, but you're gonna grow your equity. You buy it instead of paying a rent for 4,000 or 5,000 K every month. Like, you basically buy something, live there for 8 years, and then resell it. Maybe in 8 years, or like before you're gonna have a baby, and so far you can have so much equity already in one property, right? You have to see, there is like a lot of properties on the market. Some potentially will grow in the future. Some of them I would see like close. I would recommend you, like when we work closely, some buyers will send me the home close to the highway, right? I say like, no, close to the highway is kind of not an option, right? Because close to the highway, right next to the highway homes, they tend to stay on the market longer, right? So basically you have to look at this different options. What's the potential for future for the property, right? Yes, so let's go back to the purchase process. Yes. Okay, so the buyer comes in, and you as a buyer come in and you would ask me like, hey, I want to buy a house, where to buy, what to do. So if you're not pre-approved, I would recommend you to go to Steve, right? Oh, like, I mean, this is the best option because I work with Steve every year and he's doing everything fast, and he's a good lender, believe me. So You can call Steve, you can have a fast chat with him and get a pre-qualification really fast. So basically he would ask you what salary you have, how much down payment, and he would say, yes, this is your price, let's say 900K. Oh, let's average, because average homes in the Bay Area 1 million, right? So he would say 1 million is your purchase price, right? So then the differences between pre-qualification and pre-approval. Pre-qualification, you just call, really fast chat, and so on. Pre-approval, when you call and Steve sends you application form, and then he starts getting your paperwork, your pay stubs, and basically he starts looking in your credit score, and then he gets your pre-approval. So when I know your price, which is $1 million, let's say, right, average home price in a Bay Area, so we go house hunting. So in a house hunting, right, like we have a different situations. There is a lot of thinking that I mean, like, I'm as a real estate agent, I would get to know what's your requirements, what are you looking for in a house, and I will handpick some items. There is a lot of websites who post the homes. I have my own off-market listings groups where I am in. So basically I search in there. Sometimes agents post something which is upcoming soon and so forth. But yes, some of my buyers, they send me the homes they like, right? Basically we're always on the chat. I send something, they send something. Yes, I do sign you up. I can sign you up for the MLS listings. So yes, they basically would come and the listings would come to your email. But so it's kind of a spam, but yeah, I like to handpick to the listings. And yes, all I need is the address, right? And if you like a property, I can find out more information on a property, if there is inspections, if there is a potential. So one of my buyers just keeps sending me some of the homes, but then I say, like, do you realize it's close to the road, right? Are you comfortable with the road? And they say, no, let's pass on it. And I say, like, hey, this HOA planning to do so much work on the condos, right? Are you, like, the HOA fees probably will raise in the next year. And they say, oh no, let's pass on it. So if there is a potential for flood and there is a flood insurance needed for the loan, yes, I would say probably not the good option before we go even to see that. So some of the homes I will do pre-screen them before we go and see, because sometimes it doesn't make sense from, like, but if you like the house, yes, we can, but before that I will tell you what's the pros and cons of this property, right? Yes, then when we like the house, let's say 1 million, I would suggest, like, if you pre-qualified for 1 million, don't restrict yourself, right? I always ask my clients, if you go and to some websites and you go and say, like, price point is 1 million, and then you restrict yourself to 1 million, don't do that. Go to 1.1 at least. What happens is sometimes homes, they drop in price. Sometimes homes at 1.1, they hang on the market for a long time, right? I had a property which was listed for 1.250, and we actually got it with my clients for 1.1. So it's basically 150K down. So the only reason why it happened, the listing agent, he overpriced the property. He listed at 1.25, which never, like, this amount for the purchase price, that never happened in the area, right? Nothing sold at this amount in the area. So basically when people look at it, they think it's overpriced. Then search, when people put a limit at 1.2, let's say, they don't see this home in the search, right? And basically this guy, he just overpriced, and because of that his listing was longer on the market, longer. And then, but this house right now, it's valued over 1.3, right? Because this just was a moment and the way agent listed the house. Yes, to understand, if you are putting your homes in a search and you pre-qualified for 1 million, don't set yourself, don't restrict yourself to 1 million. Set a search to 1.1, and then you will see these variations. Sometimes we can negotiate, and I'm a good negotiator if something is really makes sense, right? If the sellers are desperate, they just gonna negotiate with you. maybe we drop it by 50K, and the house with the potential makes sense to put like 1.50, right? Or maybe one. So it depends. So let's say we find the house which you like, right? And it was priced at 1 million. We submit an offer, and basically, who knows what the offer is? This is a form. It looks like that, and it contains 10 pages. So an offer is a contract which you're submitting. Let's say the house is selling for 1 million, and we know about like what I do. I always try to make a connection with an agent, right? Because if there is a potentially big amount of buyers writing for the offer for the house, right, I have to compete with them. So lately, so I make a good report with the agent. I find out how many potential buyers are there, how many potential offers, and from there I do market analysis. And I would say to my clients, I say like, hey, this is a top price which I would put, but in this situation, right, I would say like, this is a price I recommend you to put on offer if you want the house, right? So but I would say the top for the house at the moment. So basically and then from there we submit an offer. Let's say the house price is selling for 1 million, right? But we don't know how it's going to go. If I see comparables and the home similar size recently sold for 1.1, of course I'm going to say, hey, you have to put 1.1. There is no way we're going to get this house, right? If let's say at 1 million, but it was hanging on the market, and so maybe we can negotiate it down a little bit. And I would say, hey, this house was on the market for like 40 days. Let's make the offer for 950, because average price here in this neighborhood is 1 mil, right? Nothing hit 1 mil. I mean, like over 1 mil. So we would write an offer for 950. In our offer, we always would put three contingencies, which are inspection, appraisal, and loan. What does it mean? So basically, some homes, they have inspections ready, right? So the seller already made inspections. If I read through inspections and I see nothing potentially bad, let's say they have a roof inspection, they have a termite inspection, they have a home inspection. So basically, if I read them, if the roof is good, right, if foundation, nothing is funky, I would say, hey, the rest, if there is like little items in the house, like oh, there is a sink is leaking, or it's such a minor things, right? If it's a house on a big competitive market, I would say, hey, remove inspections, because major things are okay, and you don't, like, you have to win this offer. But this is what I would recommend. The next one is yes, if there is no inspections, right? Let's say there is no inspections. At this case, on the offer, we would put 7 days or like 10 days in inspection time frame. So in the 7 days or 10 days, what we're going to do, I will order all these inspections. We can find a company. I use one company because I know how to read their reports really well. So it's a national company. So you order them. The whole package for the house, it would be about 1,000, right? It's a roof, termite, and a house inspection. If I read them through, and then there is a major items, let's say termite came to 10,000, right? So if we are in this time frame of 7-10 days, we just start to negotiate with the seller. We say, hey, do you want to come down with the 10,000 down, because we have to spend this money for termites? They would say no, they would say yes. Majority of the times they go halfway, right? We can still negotiate, or majority of people just take half, right? It's a general practice depending on the demand on the market, right? So yes, and mostly these inspections, right, they recommend a certain amount, like say 10,000 to fix the problem, right, on termite report. But in reality, they hire a different company to do this work, and basically you can go and hire some contractor who would fix you everything for 5K, right? So basically they overprice even they reports. Yes, and this is the case when we basically negotiate. And let's say when you submit an offer, you have in 3 business days, you have, if your offer is accepted and signed by sellers, you will have to put a 3% to the escrow. Escrow is a company, intermediate company, who would manage the process, right? The purchase process. So let's say, yes, I will take, I will reply to this in a second. Yes, inspections, right? Like basically when we negotiate inspections, we go forward and move on. The next one, appraisal, right? If I see in a neighborhood, like yes, like let's say we submit a house at we've seen a house at 950, we submitted at 950, but they see neighbor homes at the same condition recently sold, like this month for 950, or hardly reached like 940. Of course, I would say don't put appraisal, because I'm pretty sure this house would appraise at 950, right? I mean, like if they sold for 1 million, right? If differently, so if the home sold in the area for 1 million and we're making an offer for 950, of course I'm going to say don't put appraisal, because the house will appraise in any case. What appraisal is? So basically appraisal is, the bank will come, they send independent contractor who would appraise the home, the value of the home. They can say, yes, this house is appraised at 950, or this house appraised at 1 million. So if the house appraised at 1 million, you are happy, you don't have to say anything to the seller, you move on, right? But if the house appraised at, let's say 900, right? Very little chances, but yes, let's say this is a case, and we put in a contract like 10 days in appraisal. So when we got this 900 appraisal, what we do, we still negotiate with the seller. We say, hey, our appraisal came low, and can you drop 50K? And they would say no, then you just walk away. Loan is a contingency. We always keep it at 21 days. Sometimes Steve, I talk to Steve every day, and I would say, hey, this client, so on, we are about to submit an offer at this price, blah blah blah, and I say, are we safe to put a loan, let's say at 14 days? He would look at the files and he would say, yes, okay. Or sometimes I have strong buyers who go without loan contingency. I would call Steve and say like, hey, if we remove loan, what's the chances the guy not going to get loan? He says, no, there is no chances. If he approves to remove a loan, I would just remove a loan, right? But I never do that if there is risky situation. On a loan, right? When I would remove a loan, so I have potential buyers who, I mean, like I have a buyers, and I had the buyers who let's say they have amount of the purchase price in the different like in the stocks and different investments and so on. They're not afraid to go without a loan, because they get a loan, if they don't get a loan, they know they can get money to cover it. I mean, like to get the purchase a house, right? They can fully pay out the house, but they just want to get a loan, right? So then in this case, if they're sure with that, I just will remove a loan. I would never remove a loan for the person who does not, who's not sure about his work position, right? I would always ask, hey, are you okay with the work? Are you sure you're not going to lose your work in the next 30 days, right? If they say no, if they're strong with their job, I would say, yeah, let's remove it. I'm pretty sure you can move on with a loan. So basically, yes, loan is the only thing I would keep, but if I'm very sure, I would remove it. So the sellers, they want to see non-contingent offers. What non-contingent mean? That you're not going to negotiate on any of these items. And yes, a lot of properties, I submitted just last week 3 offers non-contingent, and still being non-contingent, I submitted in one house in San Jose, and there was 6 offers, and 3 of them came at the same, almost same price like us, and then they've been all non-contingent. And somebody, like 3 other offers came at the asking price, and they, of course, they didn't even look at these offers. And yes, because I made this connection with an agent. She was trying to work with me, but what happened is my clients didn't agree to certain conditions, and then they fell through. But we almost got the property, right? So yes, there is a lot of items you have to think through and to negotiate all the time. Okay, can you talk about if there's any strategies in making an offer? Based on your experience as a realtor, should we always offer the asking price? Do sellers always do counter offers? Okay, right now, as of today, as I said, some areas, let's say I submitted an offer in San Ramon. And in San Ramon, this was a neighborhood where schools rated 999, right, out of 10, all of them, elementary, middle, high school. How much potentially there is no offers? Yes, I knew it's going to be a lot of offers. So they had 7 offers. At this case, I wouldn't submit at asking price, right? I would always say, no, you have to come up a little bit in the price, right? If the house was schools not so great and no potential, but I mean, like, no, there is a lot of still good homes but potential, right? But if not good school, right, I would suggest let's submit at asking price, right? I think they're going to be happy with asking price. So if the house been hanging on the market, let's say for I don't know, for 60 days, right? It all depends on the seller too. If the seller is stubborn and he's not rushing anywhere to go, right? If he's not rushing to sell the house, he can hang on the market for a long period because market is not moving down, right? So some sellers are very hopeful, but some sellers who need to move, right, in this situation, like they probably in the purchase of a different home, they need to sell, they need to get in a contract, and then we can negotiate. I can say, hey, let's submit, and I'm actually a negotiator too. Yes, I'll try to negotiate till the last like amount for you, because I'm trying always to save for you, right? My job is to save some money for you, but sometimes when it doesn't make sense to save, right, I would just say, no, if you want this house, let's just submit an asking price, right? So yes, there is a lot of strategies. You have to know a lot of items, right? A lot of basically what happens in the area, who is the seller, what happens with the seller, right? What's your potential competition in there, and then from there I can recommend. Yes, today, as at today's market, some homes, yes, they go at the listing price. They sometimes you can negotiate down, but not the 99 rated schools, right? Because of course people gonna write for those homes. And counter offer, yes, some people let's say some agents, they would write a counter offer. Let's say if I know potentially there is only our offer for the house, right, and I feel strongly about that they might consider your offer, I would just try to lowball it. But if I know the seller, I know what they want, I would just write the asking price. Yes, they can come up with a counter. Yes, they can if they're interested, but it's up to you to take it or not. Well, recently I just submitted one offer which was way too low of the, I mean, some buyers would come up with different values of the house and so forth. So, and they would bring the value of the home so much that it doesn't make sense. Then we didn't even get a counter for this house because we tried to lowball too much, right? So you have to to make market analysis and to know what you are like suggesting, I mean, like giving to the seller. If the seller is desperate, yes, they might agree. If they're not, they just would stay on the market. And the question, will they give an advance notice if they are not willing to do countering offers? Yes, this is what happened to me actually yesterday. They just got the offer, very, very low offer, which we submitted, and the agent texted me right away. She said, no, we're gonna submit rejection. She didn't even want to do counter. So that we have to think. And I actually told my buyer, I said, you know what, they're not going to take it before I had, but she said, let's submit it. So I just submitted. So basically, yes, if this is the house of your dream and if you like it, I sometimes ask my clients, I would say, this is the case. If you like it so much, if you want to get it 100%, this is an option how we submit an offer. If you like it like 80%, and so this is a plan what we're gonna, how we're gonna strategize and submit an offer. If the client says, oh, I would just want to test it, right, so then I would say, okay, let's do this, and I would give him a different strategy, right? So yes, there is a lot of ways to work around these offers, and yes, there is a lot of items to negotiate on. We have to know the seller, we have to know what they want to. Yes, and on the purchasing process. So I think everyone is familiar with the escrow company. What do? They just check your title. They give you a clean title on the home. They manage the whole transaction, the whole money process, and your 3% and so far. Why do we give 3% at the after your offer is accepted? It's to follow the contract, right? Because we have to follow these dates of appraisal, of inspection, and so far. So if we follow those and you are not at fault at any of these dates, right, you okay. But what if you would say, hey, we've been like 15 days in transaction, and then suddenly you decided to fall through the contract, right? Let's say you decided to cancel, but there is no grounds to cancel. I can't, let's say loan is pre-approved, everything is pre-approved, we removed everything. There is a potential, depends on the seller. If he's not on a, let's say on a high demanded area, he probably would let you go and then takes the next highest offer, which was after you, if they are still on the market, right? But if not, then they might go after your 3%, and you can go to small court. And so it's I never been in this situation, and I would never suggest you to be. So I never recommend anyone in my transactions to depend on the seller, right? Like, don't be a default or anything in a contract, because as soon as you like a default at some moment on the contract, the other side will start pushing on you, so, and on me. So I would never do that. And okay, when we got our contract accepted, right, we put 3% down to escrow, and then we start this process with home inspections, appraisal, and so far. To tell in short, home inspections, if they don't have the inspections, it would cost you about $1,000 for the house, right? For property appraisal, I would go, it would probably 600, and then you remove all contingencies, and you know, like when we follow all through, and then you go to do loan signing to the title company. It's a bunch of paperwork, which is fun, but yes, and then you get closing, and afterwards you get the keys, and you can just drink some champagne and celebrate. That's perfect timing. So yes, every house, every transaction is very different, right? You have to understand there is going to be like some items which we always have to resolve. And no, it's like a lot of people, and I've been like chatting on a lot of forums, they say like, oh, agents just submit the paperwork. No, we don't just submit paperwork. There is a bunch of stuff just before submitting. I mean, like, I had this condo sent like 410 pages, right, of reports and different kind of items, and I have to look through these items and then have to call them every time. Hey, do you have a fault? It's a long process. And Steve, he does his own paperwork. He have like his own stuff to do with the numbers. And I'm on a contract side, constantly resolving issues on every item in the contract, right? So that's not just paperwork. So yes, and if you have any questions regarding the purchase, the process, please chat, send a message in the chat. I will reply right now. I mean, like, we still have like maybe about 20 minutes. Please, you can ask any questions concerning a market or purchase price, the loans, while we're here. And then if um, actually, I wanted to say, if you like this presentation, please like our Facebook page, like my Facebook page, and recommend us, recommend to our your friends, your relatives. I don't know. We run these seminars, and so far we had such a good feedback. The problem is, I've been on a lot of seminars before. We try to teach you how to buy, right? What to pay attention, and we have multiple topics to talk about. Yes, we can discuss new construction too. New construction is popular too, but I have to make it separate topic for you guys because there is too many items to discuss. Right now, we just broke down in two parts, which would, I mean, like we discuss the market, what's happening right now, and then how to buy. I mean, the purchase process. Any questions? No questions. I see.
Yeah.
Mhm.
This is a kind of old slide. Um, does anyone have questions on, I don't know, what it takes to get a loan, what kind of documentation you need? Feel free to just drop anything in there, and we could address it. So there are some programs available where you get down payment assistance. To be honest, me and Lily have been doing this together like 3 years, and we've only done one of them, just because our clientele is more Bay Area, and it's really hard to get a down payment grant purchase scenario accepted because there's so much competition. And the main reason is, from a selling point of view, it just takes much longer because there's a government involved and there's so many different offices that are involved, and it's a longer time consuming transaction, and sellers typically try to avoid it. But the one we did was actually a really cool option. It was 450,000 in Vacaville, and it was like a 4-bedroom house. The family had 4 kids or 3 kids at the time. Now they have 4. They were living in San Jose, and then they ended up. The husband works in San Francisco, and believe it or not, it's actually a faster drive from Vacaville to San Francisco than it was from San Jose to San Francisco. But anyway, so there are some really interesting programs where government can kick you in or kick some down payment cash your way, some closing costs your way. But as a rule of thumb, those programs are much easier to get through outside the Bay Area. Like when you're more into the Vallejo, um, even like Santa Cruz area, I think is going to be much easier as well. So yeah, it's a financing option available. As far as visas, if you have an unexpired visa, that's even a work visa, even asylum status, it's there is a loan, there is a bank for you. So don't get discouraged. And I mean, both of us, we work really good together, and we we could pretty much answer any questions on text. So, I mean, follow us on Facebook, just because a lot of clients now, they really like Facebook Messenger, Instagram Messenger. It's a really easy and convenient way. Um, and and yeah, so you could send us a message there, and then we could respond right away. Let's see, a question came in. Can you talk about first-time homebuyer program, please? Sure. So first-time homebuyer program, just the main misconception in it is it's going to be like a better interest rate or a lower payment. It's actually not true. Maybe in the past they used to offer this, but in today's lending, a first-time homebuyer program is basically someone that hasn't bought a property in the last 2 years. You're more than welcome to use it twice, but you have to have this 2-year window, or you have to have a really, really good reason why you're moving out of the place that you bought. Um, but to keep it short, so today, the benefit of a first-time homebuyer program is you could go as little as 3.5% down payment. Um, and In some, actually, I take it back. There is a program. It's kind of limited to the city. It's zip code driven, and it also has limits on your income. So in the Bay Area, to use it, you almost have to buy at most in the 500 to 510 price range, and your yearly income gross has to be at most, I believe it's a little bit under 90,000. Let's just say between 80 and 90,000. Then there's actually an incentive on the rate. Like we recently did one in San Jose for a buyer, 430,000 price. It was a really nice remodeled one bedroom condo that Lily found. And yeah, so this person, they did the minimum down payment. Their income matched, and then they were able to use this program to not only have a low down payment, but also have an incentive on the interest rate. So yes, to answer, it's kind of depends. There is an area that offers a rate discount, but you're going to be limited to a 510 purchase price and yearly income of 90,000. But if you're looking somewhere in the bigger price ranges, then you could do 3.5% down, and then you can expect purchase price about 810,000 at the most using this program. I hope it answers it. Any questions in particular, like, feel free to reach out after presentation or text, call, and then we could. So for a lot of people now, people don't really want to get their credit run, their documents sent, and it's okay. It's understandable. Like I know loans really well. So what we do nowadays is give me a call first, just so you understand what you could expect from a loan, from a payment. And then right away, you'll know a number, and then call Lily. And then with that number, give her an idea of what your wants and needs are in terms of housing. And then once that matches your kind of rough pre-approval, then we could make things real, and then documents and do all the things that you might not want to do right away, and it's okay. So yeah, we could do a lot of the things in the 5, 10, 15 minutes and the most on the phone. You'll get an idea of what kind of loan is available, and then talk to Lily, and then find out what for that price you could buy. And then if it makes sense, then you come back to us and let us know that yes, we're ready to get started. What's next? But we don't push our clients. We've been doing this for a long time and are very successful. Sometimes people come to them twice, even if they already bought, just to support and to kind of invite their friends. But yeah, I mean, you will know when you're ready to buy. We're not salesy, we're not pushy, but you should have an initial phone call conversation just to understand what your options are. And it does not include the hard credit check. I know a lot of people are nervous about this.
Yeah, and so just to add to, like, I have a lot of clients, and so I'm as again, I'm looking at the properties as an investment, right? So if there is no potential, and sometimes my clients send me like a very like somebody can send me a crappy house with a flat roof or something like. So basically, yes, I would say, I don't think it's a good potential. Buy some house with no remodeling but with a normal roof, right? So basically, if I'm very honest, I'm not just gonna sell and push on you, right? You need to understand, if I don't like the house, I'm just gonna tell you. That's and usually when I go to the house, I'm just always saying, like, hey, I don't like this, I don't like this item, I don't, if you're okay with that, it's okay, but if you're not okay, just let's, because a lot of my buyers, they have no idea what they're doing, like literally, like some of them, they don't know what the foundation is. If there is a foundation, let's say there is a foundation report where is a horizontal crack and then vertical cracking, right? So of course I'm going to say vertical is fine, it's a normal movement, horizontal no. And they was like, oh wow, really? Like, so yes, some items if I see, I would say directly like, no, this is not a good option. I'm not the agent who's going to sell and make you go in a contract, leave you. No, I'm going to be with you till the end. And some agent, I mean, like some of my buyers even say, you're going to be with us until the end of our days, right? Like, yes, I can help you out till the rest of your days. Some clients call me like asking when they trash pick up and so on. Like, it's a lot of items, like we're going to have long-term connection for many years, right? So yes, and about new construction, I just wanted to add the last item. Oh, here, you asking about new construction. Okay, there is a lot of things I have to discuss on the market on new construction, but we'll have a different topic on it. So a little bit about it. First thing, please, if you go there, go at the first day with an agent. Don't go without an agent. This is my advice. I mean, like, you know, a lot of people say like, oh, agents just run for the commission. First of all, it's not fully commission, it's just a referral fee. Then, but when you walk into the office, right, you basically, all your legal rights go to the seller's office. And the seller, like, who represents the builder right there in the office, he gets all this referral fee but when you're going to be in trouble, right, nobody's going to represent you. They're going to represent their builder and they're going to push on you. So think about it. And then that's the only advice right now. But yes, there is a lot of to discuss about new construction. We're going to make another topic on new construction, and it's going to be probably shorter comparing to this. I think, yeah, I got your information. We can share it about the new construction when we're gonna advertise. Do you have any opinion in land investment in the Bay outside San Francisco? Land, which areas can you specifically say? Cities, like I would say if you name me a city, it would be easier. Okay, talking about uh, the market, right? What happens? What happens with the market? You know, like people say like, oh, we're gonna have like a little bit fluctuation in prices. What I see right now, actually, a lot of like I had a buyer last year who said like, hey, I'm gonna buy in Morgan Hill, and I said, you know, if the market is going to hit, right, the crisis, the areas there, they're going to go drop the prices first, right? And yes, you would see these areas, especially Sacramento area, Elk Grove, some cities like Roseville, they constantly like dropping prices a little bit. But right now, since we have kind of, you know, stock market funky and so very unpredictable. First, when the COVID hit, like at the beginning, we would see like all these price drops from the outside of the area, right? Right now, I don't know what's going to happen tomorrow, but yeah, everything sells everywhere. About the land investment in Concord, Antioch. Well, yes, if it's a good area, it's a good neighborhood, yes, why not? Like you can buy land and just find out if it can be used for multi-residential, right? If you don't just put one house, if you put 3 2 homes in there, it's a very good potential. But first you need to make a little market analysis, like how much rent you can take from this land, what the area look like, if there's a potential. Concord, yes, it depends what areas. Antioch, I'm not really fond of Antioch, but potentially maybe in the future. Actually, they have a BART station right now there, right? Like it's further. So yes, potentially maybe in the better areas there is a potential. But when you invest into land, right? When you buy a piece of land, you have to make sure if there is utilities, right? Utilities already there. It's number one. If it's the property is not in a fault zone, if it's approved for the, I mean, like if the land is approved for construction, right, to put residential or maybe multi-unit zoning. So I had some previous buyers who've been on our sessions. They say the friends bought a land in Sacramento area, and then they find out from a city that they can't, they actually purchased the land, but then they found out that they can't build on it because there is a specific birds who are nesting on the land and they protect it, right? So how would you build on it? No, you just own the land, but you can build on it. So in regards of construction, right, guys, if you are interested in construction, we built ourselves like 800 square feet unit. I know approximate pricing. I do have some contractors whom I can direct, but they, I mean, like one of them is very good, but he's very busy, so he can just give you some price. Yeah, I can help you with some pricing. I know the I mean, like I've been during construction and I've been talking to many contractors and constantly get these estimates for my buyers who buy and sell, right? So yes, I can answer these questions if you want to have conversations about that. Yes, and about the thing about the loans for the land, right? The loans work a little bit different for the land. Mostly it's cash purchase. Or Steve, you can get a loan, or it's a different.
Yeah, I think if you're considering to buy raw land, you should calculate in your numbers that at best case scenario, you could get 50% of it financed. And this isn't going to be your traditional 3% loan. It's going to be more like private style financing, which will be about 6 to 8%, maybe even more. A lot of the private lenders now are kind of not lending anymore since everything is going on. But, you know, rule of thumb, if you want to finance any land that's undeveloped, 50% down payment.
Yeah, so on the land, and then yeah, we have to make this conversation, I mean, like this another webinar probably on the residential income. Yeah, but if you consider residential income properties, there is a good potential on the market, right? I've seen Campbell, in Campbell, there was like at the beginning of the year, duplex, and it was like priced at $998. It's like basically just like a present at Campbell, right? In Campbell, you can buy hardly single family for $1 million, right? And so this house was, and my buyer was saying like, oh, there is no like upgrades in the house. And so far, while she was discussing it, the house went in the contract, right? Duplex is a very good investment. So this photo is actually a fourplex in Sacramento, and I looked at it myself, and I was interested too because it was a good return of investment in the in a ratio of rents, right? So basically rents were good, but there was so many people looking at this property. So I've sold fourplex in San Jose, where the buyer, he just wanted to live in one unit and then rent out three other units. So there is so much potentials in real estate, right? And if you're not afraid to invest, if there's a lot of potential, just you have to search for investments. And it's real estate is a good investment in a long run, right, as an equity and so on. So basically when you look at the rent and what you can do with this money which you're spending on the rent. Yes, so please ask us questions and follow our Facebook pages. I'm as advertising. Yes, please do like, put likes on our Facebook page. I would really appreciate it, as we would put different themes, different webinars, more discussions in there. I can talk a lot about real estate, but I have to compile it in like different specific themes, or we can, usually our seminars run for 2.5 hours actually. But today we kind of fast. Any questions before we are done?
Okay. So guys, thank you
Yeah.
very much for joining. You have our information. Please, any questions, feel free. Again, 5-10 minutes on the phone, you'll get a really good idea of what you could do, and then the rest is in your hands. When the time's right, you'll reach out.
Okay. Thank you so much, everyone. Bye.
Okay, bye, guys.